There's over here, we have 100 people right now. All right. So what's going to happen right now is, and of course, excuse me for being late, guys. It wasn't a time-sensitive stream, so I had to push it back a bit. So excuse me for that. And today we will speak about daily to 4 hour and a review and an analysis of last week's price action. In hindsight, of course, right? As usual, only hindsight. And then we have some FAQs, right? So it should be a good one. Now, is anyone recording?
Yes, Rabbitman is recorded, like last time.
Rabbitman is recording. All right. I will too, just in case. All right, so how's your week, folks? How was the weekend?
Positive.
With your
yeah,
positive?
meets money for the first time.
Yeah, I mean, Euro, we're going to see right now what happened over here, right? It gave a good, a good and a bad bunch of price action, right? We will see exactly what happened. So to begin with, we will start with the daily to the 4 hour alignment, right? And as we go deeper into this group, this mentorship, quote unquote, then we will go into the even lower time frames, but that comes later, right? For now, we go slow. There's no hurry. Take your time. Right? So
we
for
cannot
now,
see the screen.
Can you see my screen?
No.
All right. How about now?
No again.
Now?
Nothing.
Share screen.
Also, Romeo, back in March and April, you said that when you feel rusty, you go on the 15-second chart. What do you mean by that? Do you try to look for soups on the 15 seconds or what?
You're digging deep, huh?
Yeah,
The
deep. Telegram.
Right. Well, we will come to that. That comes afterwards. And the deeper, next week, we'll go a bit deeper into the lower time frames, right? Which is a goal of mine by itself. That is a topic of discussion by itself. So let's follow the program, right? Today we go the daily and the 4 hour. The next week onwards, we'll discuss a bit more of the low time frames. All right. So take out your coffees or juices or teas or whatever you drink, right? Take a breath, relax, and let's dive into the charts. Is the screen audible? Audible? Is it visible? The screen cannot be audible. All right?
It is not visible. Now it is, yes.
Now, yes.
Excellent. So the week before, for one shot, one kill, we had what? What was the setup last week? We had
the buys, the multiple soups.
Exactly. From here to here. Now, the highest probability setups are going to form in the anticipation of the daily candle shape, right? And the weekly candle shape. Right? These are the basics, nothing new here, right? If you can't see a clear shape, daily or weekly candle is gonna follow, then you are in low probability conditions, right? All through the lens of the open, the high, the low, and the close. The same old diagram, right? Open, accumulation, right? Manipulation, key level, and up. This is basically what we're trying to do, right? Until the 50% of the candle, this is what you're hunting, right? Whatever happens after, and for those of you who've attended level 2, this is a deeper delve into that, right? Whatever happens after the 50% of the candle, I don't care, right? As long as I got this shape of the candle, right? So I'm not looking at PDRAs, I'm not looking at breakers and order blocks. I'm looking at this open, key level, smack into it, and then I get some sort of reaction, right? Up until half of the candle. All right. So go to the weekly. Last week we had a rejection candle, right? A bullish rejection candle, a doji. Right, there's some homework for you, ICT. Go Google what a doji is, right? You might find it useful. Right. So we had a bullish rejection candle last week. What does that mean? When you see the week close like this, then what's a reasonable anticipation for the next week's candle?
Up.
Up?
Yes, retracement.
Until where?
Until some internal liquidity.
Until at least the weekly FVG, right? So
Are
that
you
in itself,
specifically speaking on the high of that FVG?
Yeah.
the low of the high, right? So we're expecting it to open, right? We have an order block over here, right? And this was the anticipation given out to everyone in advance, right? Now look at the lower time frame range aligning with the higher time frame narrative, right? So range, liquidity pool, range high with a pending liquidity pool down here. There's a high chance that we smack back down into it, right? Range low, range high, smack back down with this consolidation, expansion, retracement, right? Expansion again, same size leg at least, right? And then we have this bullish order block, right? Now, I'm pretty sure, in fact, I know for a fact, a lot of you had marked this breaker as an entry, right? And you got wrecked. That is for certain, right? Why did it happen?
We're in a premium.
And by the way, have we discussed this price action before or not yet?
No.
We did,
Okay.
I believe, last week, right?
This?
The entry at the lower FVG there.
All right, excellent. So why did this happen?
My understanding, price wanted to retrace in a discount to go higher.
Yes. As long as we've closed inside the breaker, right, then expect a deeper retracement. You understand? So this is the breaker. Look at the reaction it gave you. Wick, smack into it, wick, and expand higher. Into the breaker, expand higher. Right? That's a good reaction. A bad reaction means you look for lower prices in the discounted price point, right? So we have the run, right? We just went already. And as soon as we tapped into, let's mark the weekly open, right, before anything. Weekly open. Key level, expand. If you got this, your week is over. You're done. Right? Now, if you want to continue, which is what we did, right? As soon as we hit a liquidity pool, then always take something off, right? And always consider a reversal, right? Especially if you pair it with a higher time frame, strong downtrending market, right? Rejecting highs, breaking lows, rejecting highs, breaking lows, rejecting highs, breaking lows, right? So any pop of a high is expected to get smacked back down, right? Again, basics. So as soon as this idea was completed over here, then we abandoned the bullish bias. Until when? When does this flip into bullish?
After I run the highs,
No. After you, if you want to be bullish, right? You're never
You need
bullish about the
low.
high.
Yes, you need
Right.
to be low.
No, either low or you wait for an expansion above the high, a clear break, and then a smack back down into this high, and then a similar leg, right? What happened here was we went above the high, we closed above the high, and this suckered in a lot of, probably all of you, right? Or most of you, for sure. There's some buys stuck up here, right? So let's look at it through the lens of the weekly candle, right? Weekly candle, open. We smack into a key level, right? A weekly FVG and an old high. So what do you? What's likely going to happen?
We're likely to get a retracement back in at discounts.
Now, was it possible that it goes higher?
Yes.
Yes. In fact, many of the good old Twitter traders had this marked out. These equal highs, and that is the problem of looking at equal highs solely as a pattern, right? If you look at those equal highs and you pair them with this old low, right? And you pair them with a consolidation, which was broken and retraded back into. Do they look as enticing now? Does it look likely that we're going to reach into them? Consolidation, expansion, retracement into the consolidation, expansion again. So is it likely, bearing in mind what time of day it is, what day of the week it is, right? Weekly candle. likely to reach above to those highs?
No, but I had a question.
In hindsight,
So-
yes, right? But tell me.
When you look at the consolidation expansions, do you measure the equilibrium of the consolidation as well as a PP
Yes.
array?
Yes, but that's another discussion, right? Right now, we're gonna focus on this, which is candle opens, right? So we got the bullish candle continuation, right? However, we're in a downtrending market profile. Any pop of a high has to be smacked back down. Pair that with this failure to reclaim the old low, right? And of course, the classic FVG above a high, right? Now, if you want it to be bullish, then at least you want to see this flipped into an inverted FVG, right? Which didn't happen. And then you go here, range low, range high, so a range above a range, right? Above range. Now, if you remember, I did call for it to go down to this low when we were up here, right? And that offered a good 1, 2, 3 before it went back up and hit the stop loss. And another one for the notes, the stop loss is usually the best entry, right? The stop loss you trade is usually the best entry you will find, right? So we had that open, smack into key level, right? If that was a lot to digest, then it can all be summarized by that, right? Open, key level, opposite. Open, key level, higher. Open, right? Open, key level, smack back down, right?
The first idea you gave, the one that failed, the one before that one,
Yes.
is that
Yes, but
where the rule you gave us of taking everything of at 75% of the range came from? Because
it failed. It failed as
to
an
it?
analysis, but if you were a trader, then you should have at least got something out of it, which I think you did, Adam, right? You sold over here. I saw your chart, huh? You sold.
Yeah, I made
over here,
money.
You got a slice, and then it reversed, right? Now, when you have an analysis and it hits the stop loss, right? You'll notice that most of the times your stop loss is the entry, right? As happened over here, especially if you mark the time that this happened, which we'll discuss later on, which is why in the group chat, remember, I said we have the same bias, right? Now, the stop loss hit. Did I say, you know what, guys, it's going towards the stop loss? It's ignoring, they're not respecting this inverted FVG. So let's, you know what, fuck it, let's be bullish. Did I say that? No. I stuck to the bias because of this time that it happened, right? Which will be a discussion for next week, right? For now, we focus on what happened, what we said so far, right? And here's a model by itself, which I've mentioned a couple of times, which is if the FVG fails, right, then target the high of the FVG. Same with the breaker, same with the order block, right? So that's what happened. And as soon as you had this close below this candle, right, with an engulfing candle, 3 a.m. displacement, and it was down from there, right?
So as an analyst, what would be in your journal? Like, what's the takeaway? Why did it fail? Is it is what it is and you move on because it wasn't high probability, or what's the takeaway?
The takeaway is, what time did this FEG get hit?
Yeah, kill zone at 9, or I don't know.
Is that a kill zone? That's 6
What?
that's 4 p.m. New York time over here.
Ah, no. Yeah.
So if it's closing above an FVG outside of a kill zone, right? Because we know that outside of kill zones, quote unquote, we don't take trades, right?
Yes.
If you want to summarize again, because I like to simplify things, right? Again, in summary, you're looking for turtle soups / displacement during kill zones, right? That's basically what it is, right? So if this didn't happen during kill zone, that's the first warning sign, right? This is where you would cut the trade, right? Or at least reconsider. Consider a reach to the rejection block over here, right? And then to the high. And all along here, there's trade ideas, right? Which we will discuss as well later on. But yeah, the of the review was, if you're gonna take away something from this live stream, right? When you watch it again, once, twice, 3 times, then the takeaway is the diagram I showed you, and I'll show it to you again and again and again, right? Opening price. Think of the opening price like a magnet, right? Or like a slingshot, right? So opening price, it slings over here, and it flies over there, right? Hitting a key level over here, it slings over here, hits the key level, and smacks back down, right? So opening price. Let's draw the diagram again. What is this? Racist trading view. No black. Ah, there you go. All right. All right. So this is the higher time frame candle, right? This diagram, this box represents the higher time frame weekly candle, right? You have an open. It smacks into a key level, and then it shoots back up. That's it. All right.
So my question is, I noticed that you're doing one trade a week. This is the one shot, one kill style. You found last week's trade. You said we were looking between Monday and Tuesday, but this week it was on a Thursday. Is Thursday a good day to expect a reversal as well? Or it depends on the weekly profile? Yeah, I think his shit died.
Yeah, it was 1%.
Hi, folks. Back on the phone. All right.
Did you hear that question?
The iPad died, excuse me, as you're probably watching and sweating as it went down battery, right? Let me see if I can connect the laptop. Are you guys following along so far? Is everything clear?
Yeah.
Yes.
I just I had a question while your iPad was dying. So the question was, I noticed you're showcasing one trade a week here, which is a part of your intraday trading plan. I'm assuming.
One trade per higher time frame candle, right?
Is this so? Are you trading intra-session here or intraday? Are you trading the weekly candle?
I'm trading the weekly candle, so
Okay.
basically, all right?
Okay. And you took a trade last week. You said Mondays and Tuesdays are good days to hunt.
Yes.
Relating to your slingshot. And Thursdays are good days because you're trading the end of the candle formation, correct?
And that is precisely what happened, is it not?
Yes.
Yeah.
Okay. I'm just making sure. Thank you.
Yeah. We'll speak of that right now. Let me just
Right.
let's see if I can connect my desktop, right? I'm sure you guys prefer the desktop to the phone. I would too. Telegram web. Load the Telegram on the desktop. Laptop.
Also, why did you take everything at the FVG when you shorted Thursday? Why didn't you hold for next week as we were bearish?
No, I said, if you remember, what was the commentary I gave? What did I say?
Yeah, it was previous daily high to previous daily low.
Did I say that's it? I said we can expect at least the FVG,
Yeah.
right?
First
No.
target. But why did you take everything at first target?
Because I was too busy to watch the charts. It's that simple. Me
Okay.
personally, the reason I took it off at the FVG was because I don't have time, and you don't want to fall in the trap of trying to trade every single pip of every single candle, right? If you can get one slice, right? If you use the slingshot, right? If you can get one slice, a pound of flesh, right, per candle, then you're good. That's all you need.
Okay,
If
thank
you
you.
try and catch every single pip of every single market, every single hour of the day, then you'll end up burnt out and wrecked. Right? There has to be some moderation.
Okay. Does the logic of your stop loss being the most likely reversal point apply majority towards turtle soup entries? Because the swing highs and swing lows are getting closer together, and your theory of that.
Yep.
Okay.
I've got a question about defining ranges. So, what is it? What's your sort of minimum requirements to define a range?
Chop. There's a nice definition which I put in my in the other account, the Turtle Soup Central account. Right? It has a nice definition of trending markets versus ranging markets. Right? But visually, you can tell when it is rejecting, when it's respecting both bullish and bearish PD rays, when it's trapped between two close PD rays, right? Let's open the chart. Right.
So, I mean, the example you were going through last week in the dollar. On the weekly, you could have defined the range as being like it was broken to the upside, but that's where you ended up putting the top of the range. So weekly, if you went from like Jan to,
let me open the chart right now. See what you're saying. Let's open the chart. All right. Let's go to the laptop.
so it always looks obvious in hindsight. It's just, at the hard right edge, it's.
All right, folks, I'm back with the laptop. Is the voice clear?
Voice is clear.
All right. Is the screen clear?
Can't see the screen.
Share screen. Not my face. How about now?
No.
Not yet.
Oh,
now?
Now, yes.
Now you can see it?
Yeah.
Can you see it?
Yes.
Yes.
Yeah, we can see it.
All right. So before we continue with the FAQs, let me just finish. Let me just finish touching on the daily to 4 hour, right? Which is the main discussion. Is that fine? Plus a review. So it's 2 in
Yeah,
1. All right. So what happened here was this is a breaker, yes or no? Is that a breaker?
I'm
Yes.
not seeing the screen.
Do you see it now?
Yes.
Yeah.
This is an old low, right? Right. So it's an old low. I'm not using the laptop, right? We smack right into it to the pip. And before I learned ICT, right, one of my main strategies was just blindly trading all lows and all highs, right? It works until it doesn't, right? But when it works, it's pretty smooth, like this one over here, all right? Now let's go daily downwards, all right, for this one. So what you're trying to do is have a higher time frame key level, right? Like daily, and pin it down to lower time frame highs and lows, right? Market structure, pretty simple. And the whole concept of higher time frame and lower time frame is pretty simple until you go into the intraday. That's when it gets interesting, right? But over here, a rectangle, higher time frame key level over here, right? Let's go back in time. Good old hindsight, replay button. Right over here, right? So you have the higher time frame key level marked, right? Now, what do you see? Anyone who has a mic, go ahead. Imagine you don't know what's happening next, right? What do you see? This is a good way to practice the
Market structure shift.
the second best way to train your eyes after live market data, right, is through this replay button, right? Range low, range high, mid range. The easiest, right? Probably the most simple way of trading. Range low, range high, and it's the way I do everything, right? So you have this over here. Over here you have the first thing you do before anything is probing the market profile. Trending, ranging, what is it right now?
It's trending, I would say. On the
That
lower
is
time
correct.
frame.
On this lower time frame, it's trending, right? We're breaking highs, rejecting lows, breaking highs. So we expect lows to be rejected. Here's a low with a key level below it, right? As we know, lows with key levels below them or above them are good candidates for turtle soups. But we all know that, right? Here's a little more. Here's a bit more advanced piece of information, right? Which is this is a rejection block, right?
Yeah.
Rejection blocks are also liquidity pools, right? And there are a place which many retail, in fact, a lot of retail, right, whichever of you used to trade non-ICT concepts before, you probably used to, and they're considered technically as a safe stop loss, right, for continuation trend following traders, right? However, what I've noticed is that rejection blocks, usually, more often than not, they are. You have this order block with a long wick, right? Order block over here, digging into the low. This whole rally has been sponsored by this one candle, right? This one specific candle has sponsored this entire rally. You see? This one candle, right? Order block with a long wick, rejection block. So as soon as you have this happening, right, which is also a retracement I traded, as you all saw, right? So it's a rejection block and an FVG on the higher time frame, the daily, right? Slow down. Play. So we're trying to work within this one candle, right? We're trying to take it from the candle's high to the candle's low. That is a 3-candle model, right? What increases the chances of it giving us this retracement, right? Again, roll opening time of each candle, right? Every single candle has the same phenomenon happening again and again, which is open, key level, go. Open, key level, smack back down, right? So over here, this was the idea, which is smack back down into the rejection block, right? It is extremely unlikely, and go back to your charts and backtest this, right? That's your homework, is look at rejection blocks and look what happens at rejection blocks, right? It's been a long stream, right? Not over yet, but focus. Backtest. I won't say backtest rejection block. I'll say backtest what happens at rejection blocks at the lower time frame, right? That's one thing. And backtest, how many times is a rejection block left untapped? It is extremely unlikely, right? And see how you can use that to your advantage, right? To anticipate, for example, retracements. So it's a good way to, in a trending market, right? We know that highs are broken and lows are rejected. And in some instances, they're left untapped. So they're engineering liquidity for the future by leaving lows untapped during a buy program / uptrending market, right? So one way to anticipate retracements is untapped rejection blocks.
So, would you consider the rejection block formed right before the one you marked out lower at 1.046 ish?
This one.
That's the one more to the left.
I mean, this one.
Yes.
This one smacked into a rejection block over here, right?
Do you consider that a long enough wick to be a rejection
you either
block?
enter from the stop run or you enter after stop run, right? Everyone has been stopped out of here. That's when you enter, right? Rejection block right here. So if you ignore everything if you ignore this stop run that happened, right, and you see this long wick over here, it's an order block with a long wick. It's not a thick, bulky order block. With a wick, order block plus a wick over here, right? Not that long to be fair, right? But a stubby, a visible base, right? It is extremely unlikely that this goes untapped, right? Doesn't go like up the path. Price doesn't go up and down and up and down. No, it goes consolidation, right? It leaves behind liquidity pools for the future, right? Untapped, higher. So yeah, that is indeed an example of a rejection block. All right. So we're using the higher time frame key level and the rejection block to anticipate a retracement. We smack back down into it. Now, how many of you witnessed this drop live? Like, how many of you were attending this day?
Yeah.
Yes, I shorted NFP.
Right. Let me do let me raise a poll right now, because I'm pretty sure most of you are Forex traders. However, let's make a poll. Which market do you predominantly trade? Forex. There you go. You have it right now. So we smack back down into the rejection block, right? So we have the we smack it down into the rejection block, which is also blended with this breaker over here, right? Consolidation, expansion, retracement. We like to see our levels which we mark out hit violently, because that usually means that they're more likely to work, right? If it's slowly going towards the level, slowly just grinding towards the level, then more likely than not, the level is gonna fail, right? When I mark a level like this FVG over here, right, and it smacks into my level, then I get a lot more interested in the trade idea, and potentially even risk and reward a lot more, right? So what happened here was we smack back down into the key level. Now, a blind market structure trader would see this as a break in market structure, right? But it's not. It's a key level being hit violently with this specific one candle stabbing into an old low, right? As soon as we close above this specific candle, then we're expecting higher prices, right? Close, smack into it, and then a strong this one candle is the specific candle which sponsored the move, right? And this is an occurring phenomenon which you will see again and again. Again, we always talk about order blocks, breakers, OTEs, but they're all part of a turtle soup. Order block, turtle soup. Breaker, this shift in market structure to the upside was also a breaker. Breaker, which the candle that caused the turtle soup, right, caused the market structure shift, which happens after turtle soup. The OTE, which came also, was after this measured from this turtle soup, right? So it's all it all goes back to false breakdowns and false breakouts, right? So we smack into this key level. The daily range is exhausted, right? We close above, and this one candle is sponsoring the move higher, right? So if I was to summarize the alignment of the daily to the 4 hour, 1 hour, right? Then you would go and say the following, right? The daily key level is mixed with the 4 hour. Where's the plus sign on the Mac? There you go. 4 hour market profile. Also 1 hour, right? If the 4 hours is unclear, then you go to the 1 hour, right? So this is your rigid rule which you apply and which you should be studying during this week, right? And as we know, the expectation was to the dollar, right? The expectation of the dollar was from last week to use this specific low to rally higher, right? To the drawn liquidity, which is up here. How it reaches there, we're going to have to see, but it's going to be a nice, interesting ride. Over here, same concept. Dig into the low, close above, and rally. This entire up move was sponsored by this one specific candle inside of the turtle soup, right? And this is a good demonstration of the concept, which is lower time frame breakers opposing the higher time frame order flow are turtle soup, right? Over here as well, we have this one by the balls or by the tits, right? Over here, one of my buddies or ex-buddies, Finesse, right? He was bearish down here, right? Why? It's a breaker. No, it's not. It's a lower time frame breaker opposing the higher time frame order flow, right? So another example over here, and the draw liquidity on dollar is going to be up over here. If you stuck it out this far, then you deserve to get the draw liquidity. Okay. So yeah, that pretty much wraps up what I have to say.
So,
Right.
Before you go,
And
my
now
question-
we have the FAQs, if anyone wants to ask.
So, can I ask that when you're looking at your daily PD array, 4 hour, 1 hour profiling, when you talk profiling, are you talking about price profiling, not time profiling, more specifically? As in, you're looking for a range to form, you're looking for it to tap back into it through that range, or
See, the thing about displacement and time, because time is definitely more important than price, right? Time is more important than price. However, one thing has to be kept in mind, which is displacements usually happen at the correct time, right? So if you ignore time completely, right, which is not advisable, but if you pay attention more or less to time and really understand the logic of the narrative and the order flow which is happening in front of you, then you'll have a pretty good read on price, right? Because the moves will always happen at the same time, right? It never changes. It can vary, but it never changes. How you interpret the move is up to you. That's your mistake, right? But there's always certain moves happening at certain times, always, right? And they're the same times.
So when you do trade a daily PD array and you're profiling both time and price, would that
That
mean
is
that you're
correct.
profiling the weekly profile with it, meaning that you're looking for a specific day for this
Of course.
displacement to occur?
Of
And
course.
then that's when you break
I-
it down.
I'm looking at certain PD arrays. When I mark this excuse me, when I mark this candle that sponsored the rally, it's not a random candle. It's a candle that happened at a certain time, right? Down to the candle, right? The order block, it's happening at a certain time. The breaker happening at a certain time. The break off the breaker happening at a certain time. Everything. So I'm paying attention to that. In summary, of course, for the general populace, kill zones. That's all you need to know. Anything else?
Sorry, dumb question. What does profiling actually entail? I
What do you-
understand part.
What do you mean?
So you're saying profiling the lower time frame. What I would normally do is mark out the higher time frame levels and
Uh,
wait for certain times for
Did
the
you
total
attend?
soup to happen. But
Did you attend the level 1?
yes,
The method. Did you join that group?
I'm not in that
I can't.
group.
Well, whoever's listening, if you haven't, then I would advise you, because a lot of the stuff I'm saying comes from there, right? But in summary, if you want to make the most out of this, then I would advise you to join both the method and time interval soup. But in summary, it's basically probing order flow, right? Highs and lows. Market profile. Are we trending?
Okay.
Or are we ranging? What's happening? Right? And use those. In trending markets, there's a way to work. And in ranging markets, there's a way to trade them. Right?
So earlier you said your entry was your stop loss. What did you mean?
No. The stop loss was the entry. Again, if you have journals, which I'm sure 90% of you don't, right? But whichever of you do have journals, and you look at the stop loss, it's one of two things that happens, right? One, it's either the stop loss is the perfect entry, right? So your stop loss, when you finally gave up, right? You were longing all the way down. When you finally gave up, it gave you a nice rally, right? So the stop loss is either the perfect entry, or it's the perfect SR flip, right? So you'll see it hit in the stop loss, like to the pip, and the stop loss will become the strongest PD array ever, right? So this is two things which happen to the stop loss level you place, and you should use this information to your advantage, right?
So you always say the entry doesn't have an importance. You only need the stop loss and the GP. But you say that the best entry is your stop loss. So how do you get good at selecting invalidation levels? Like that's the last line of defense. If that level hits, I want to see bullishness and vice versa. And you still fuck it up. I don't want to say it like that, but I mean, yeah, you understand the question.
Yes, again, the system is perfect. The system is perfect. The only error that can happen is from the operator, right? So what happened was, for example, the euro. Let's look at the euro trade, right? Now, we know that in the weekly candle, we have Monday, right? We're looking for Tuesday, Wednesday, 70% of the time Tuesday, right? To have a low and a lower high. And then Thursday, Friday to cap the daily range, right? If you see some capping signs at the end of Wednesday, sure, you can take them. London close, right? However, the basics are the basics, which wasn't paid attention to this one, right? Which is Thursday and Friday are the capping days of the weekly range, right? So the system is perfect. The only error that can happen is from you, the operator of the system. You understand?
So you forgot that we were Wednesday, or
No,
yes?
I saw topping signs on Wednesday, so I took the short, which was a decent short until it wasn't. Right?
But why should you consider it a mistake if it went with the statistical edge? I mean, there were signs that over a large sample size you were profitable doing that. Why would you
As
consider it a
as a
mistake?
trader, it's not a mistake. It's actually a win, right? If you had followed the signal, right? Some of you did, right? Then you made money with this move over here, right? And as price is moving towards your anticipation, you monitor price. You don't just sit there and let it just slide. You watch it as you entered here, for example, right above this high. You watch everything that happens all the way down here, right? You watch what happens at the potential reversal points. You watch everything, right? So as a trader, you made money. The signal, quote unquote, because I do not want this to be a signal channel, right? Rather a fishing rod shop, right? Not fish. But if you followed the arrow and entered blindly from the time I posted it, then you'd have made a 1 to 3, 1 to 4. So as a trader, that was a beautiful trade. But as an analyst, you didn't wait for Thursday. Thursday, Friday are the capping days of the weekly range, depending on how much expansion had occurred until that point. Right?
What do you look for to like verify you're on the side?
If you're bearish, then
Yeah.
you look for bullish key levels to be broken and bearish key levels to be respected. It's that simple.
On the time frame you traded on, or
Always pairing a higher time frame key level, right, to a lower time frame range. Always. Right? And this is always there. It's never going to stop working. It's always the same thing over and over again. Every single time.
Question, Romeo. Where do you find the range on the 4-hour chart though? If you're pairing it with the daily PDR?
Like
Is it the
it's cutting
sorry,
off.
cut it.
It's cutting
I'm
off. I
saying,
can hear you.
where do you find the say on the 4-hour after you find the daily PDR, right? Where do you find the range for the 4-hour? Is it the first candle and then you wait for the second candle, then you execute on the third candle?
I don't get the question. Can you ask again?
All right. Say you found you mark off a fair value gap on the daily, right? And
Right.
you're using the 4-hour for your framework, right?
Right.
The first candle that trade up into the fair value gap, which formed on the daily. Do you wait on the other two candles to form, which give you the 3 candle formation
You
to
can
find the range?
you look for no. You have the key level. You look for the same sequence, right? Which is entry 1, turtle soup, right? So this is a key level, right? Good. Your key level. Daily key level. Sounds
Yeah.
good, right? So on the lower time frame, some range is going to be there all the time. Turtle soup, 3 candle formation with SMT or not, right? Takes the body or the wick. Turtle soup, and then order block, and then an OTE, some sort of OTE, and an OTE is any retracement which doesn't take out the low, right, and higher. That's
All
it.
right. So, question again. Say the first candle trades into on the lower time frame, right? The 4 hour.
Right.
The first candle trades into the PDRA, the key level you're looking for.
Right.
Is it the same concept? So you have the first candle touching the PDR, the key level. You wait on the second candle to form out to turtle soup the first candle that touches the PDRA, and then the third candle you execute on.
Yes.
Okay, appreciate it.
No problem. There was a question asked in the group, right?
Okay.
Which is, how do you anticipate us to reach for premier discount or not? Right. One thing that ICT has not taught is the 0.382 fib, right? And the 0.27. That is the answer to those questions. All right. So if you're listening, I think his name is Harry, the guy who has a question. It's a good question, right? So Harry's answer is that. So these 2 fib levels would be a good addition to your charts, which is 0.382 and the 0.27 Fibonacci levels, right? They're used to measure the strength of trends. Now, in a strong uptrend, price is going to retrace these 2 and skip the 50%, right? So it's so strong, they only need to retrace this much to keep going higher, right? So that is the answer to that. It was an interesting question, right? And there's the answer.
So, my question is, when you look for that range formation, do you have a specific system where if you have a daily PT array, you look for, let's say, that range to form on the 1 hour chart, or do you just look for any lower time frame chart for
No.
that range of formation? to
Daily
form?
is usually going to be in the 4 hour. If it's not clear on the 4 hour, the 1 hour, right?
And that's where you expect the formation of a range, a soup, and a breaker.
Yes.
Okay.
And again, like the details are cool, right? I'm known, and a lot of people probably follow me for my details, right, and my attention to the details, right? However, they're all under the umbrella of what I mentioned before, right? Open.
Is in there.
You guys hear him?
No.
No.
No. Who's asking?
I'm assuming he was going to say the same thing that he's been saying over and over again. Open, consolidate, protract, and then expand.
Can you hear me?
Yes, sir.
Is it clear? Right. So that is pretty much the summary of what I'm looking at through the lens of whatever I've taught you, whatever you've seen me talk about on Twitter, Telegram, wherever. Right. I'm looking at everything through the lens of this open, smack into key level, high. Right. Using now, it's one thing to know this, and it's a totally different thing to apply it. Right. So go back to the first messages on how to apply a new concept, right? Which is something no one talks about. They all say, hey, you know what? Yeah, here's a strategy here. No, they don't talk about the importance of how to start trusting the strategy. And that is mentioned in the very first message of this group, right? If you scroll up, the first two messages are talking about exactly that, as well as the first video I posted on this group, right? So, yeah.
Hey, Romeo, so the guy that asked you for when is price going to discount, I had an answer for him, but I didn't know if it was very correct. So you back in the past, you said that you gave us 4 examples that a H1 range takes 3 to 4 days to form and 2 days to play out, right?
Yeah.
So you keep that statistic in mind, or is it just for info?
It is kept in mind.
Okay, so you would take that as we will not retrace because we've been ranging for that much time.
No, that's a totally different thing, and a totally different model, right? Something different. It's not the same thing.
So, a question that I have is when you're talking about displacement happening at the right time, are you looking for 2 displacements? One of the displacements being the protraction into your key level, and the second displacement being towards your target, correct?
Yes.
Are those both supposed to occur at the quote unquote right time at the kill zones?
That is correct.
And is there any more that you look for? Or is that only 2?
That's pretty much all that needs to be mentioned right now, right?
All right.
Also, if you see a range, a clear range that looks very hindsight, like textbook example, but it just didn't take the low or the high, and it went from the middle of the range to the high, to the opposite side. How do you learn from that? Like it happened on Euro.
That's why you mark the mid range. Right? That's the importance of mid range, and that's where you pay attention to SMT as well, right? Because that usually happens 9 out of 10 times with SMT, right? With a divergence in the market.
It happened in Friday, I think, in Euro. Look, data,
Oh, here.
yes.
Oh, here, yes. We saw
Yeah.
it. And pound took the high, right?
Yes, by a mini pip, like
That
a
is
tenth.
correct, right? SMT. SMT is the answer. I get your question. The answer is SMT, right?
Okay, so you wouldn't require Euro to take the liquidity
No.
because Geo already did that.
That's the whole idea of SMT, Adam. Right?
Okay.
So, to get this correct, what you're saying is it's not just the turtle soup that has to happen in the kill zone. Even the price crashing into the higher time frame has to happen in the kill zone. Is
Of
that
course,
correct?
always. Of course.
Okay. I didn't know that. Thank you.
If you go back and look at the charts and see what time everything happens, right? Once you realize that everything happens at a certain
What you're saying is it's not just the turtle soup that has to happen in the kill zone. Even the price crashing into the higher time frame has to happen in the kill zone. Is
Of
that
course,
correct?
always. Of course.
I didn't know that. Thank you.
If you go back and look at the charts and see what time everything happens, right? Once you realize that everything happens at a certain time, then you it becomes a lot easier, right? So you just wait, you sit down and wait, because you know that 70% of the time price is gonna consolidate, right? So the markets, they spend 70% of the time in consolidations.
So if
The manipulations happen at certain times,
yeah,
always.
so if price were to hit a really juicy higher time frame during a non-kill zone time, what you suggest is just to sit on your
The
hands and do
system
nothing.
says don't go near it, right? Unless you want to trade a higher time frame trade with a higher time frame risk reward, right? Which is pretty slow. You can do that. But on the lower time frame rules, no, you can't.
Thanks.
All right, folks. That is one entire hour. I was expecting less, but there you go. You got 1 hour. There's a lot of stuff, some new things I mentioned in this stream, right? So hopefully you are still awake. A few of you at least, right? And yeah, I spilled a bit too many beans this time, but there you go. You have it. All right. And yeah, that's all for today.
No more questions.
No more questions for this one. If you have any questions, you can gather them. And the way I saw Harry's question as an interesting one. So if I see, I'm reading the chat, huh? If I see any, what do you call it? If I see any interesting collectively, like a question which is being asked and it's worthy of being answered collectively, then I'll answer it, right? Otherwise, FAQs as usual.
A guy asked about. Okay.
All right.
Go ahead, sir.
So this concludes the live stream, folks. All right.
Oh no. One last question for a guy. He asked a move that happened in gold in Friday. He didn't. I mean, nobody understood what gold did. But maybe you can give us your thought, your view on what it did.
I haven't been looking to go for quite a bit right now, but it should have bounced. Right. Let's see. Yeah, there you go. Week.
Just check the monthly. The monthly FVG is, I believe, what it.
A nice hindsight, of course. Hindsight rejection block over here, right? Very nice. Hindsight monthly FVG as well, right? So, yeah. Hindsight monthly candle, 3 candle formation, right? So gold, unless there's a clear, obvious swing, I don't like touching it, right? There's like a super clear, like for example, the swing, which is going to take us down to over here and down here, right? That could be a swing that can retire you. If you play properly.
Can you go on to the H4 because there was a clean turtle soup, but it just went up.
This one down here. I mean, again, if
Yes.
you had, yeah, not bad, not bad. Even as a blind pattern trader, turtle soup trader, you'd have got this, right? Trend, range, reversal, right?
No, I'm talking about the one that happened up there. Look.
Up where? Over here?
Yeah, yeah.
What's the issue?
I mean, we had a clean reaction, as you see on the H4, but it decided to pierce through it on Friday.
Over here?
Yeah. I mean, I expected it to be like Euro and Nasdaq and every other pair, but I mean, it's gold. What was I expecting?
Exactly, right? Gold is a bit.
For me, I look at the gold futures. It's a lot cleaner. It was simply respecting a daily or a monthly FEG on the daily time frame. If you look at GC1,
I don't pay that much attention to gold unless it's like a super clean swing, as I've said before. So I don't know. This is not something I'm looking at, right? This trying to catch this is not it's not my thing. And if you're into that, then up to you.
Also,
However,
why
it does have a nice weekly close, right? So that could be something to look for, right? But I'll only touch gold if it goes back above these highs, right? If it stabs back up here and smacks back down here. Anything else, I'm uninterested, right?
also, why did you deem indices as low probability for the past 2 months? Why?
Because let's see, Nasdaq had a projection for Nasdaq. Whoops! Oh, that was not supposed to be seen by anyone, right? That was not supposed to be seen by anybody. Yeah, Nasdaq is looking good. Nasdaq is looking. Again, it was.
it's a hell of a swing trade.
Right. The indices, yeah, they're. I don't see anything clear, to be honest, right? So I prefer to leave them alone. If there's a clear 1 hour, 4 hour daily swing, like the last time I looked at them and I had interest in them was down here, right? And you can see why, right? Is down here below these lows and over here, and that's it, and over here as well. And this was the last time I found them interesting, right? So these are the points at which I was looking at the indices, right? And within them, of course, you have more. So yeah, for now, I don't know. It would seem
You
like
stick to Forex,
yeah,
to Euro especially.
yep. It would seem like this is the next move for Nasdaq, right? Goes over here, and it smacks back down into these equal lows, right? I had it marked out. I totally forgot about that. Right? That seemed like an opportunity. With this being your line in the sand, right? So yeah, there's a free Nasdaq analysis for you. Anyway, folks. Of course, if it works, I go and boast and brag. If it doesn't, then I ignore it as usual. Anyway, folks, thanks for listening. Right. And my apologies for any inconveniences caused, but I had to, right? It was not time sensitive, so it's no big deal, right? And have a good week. Don't trade Mondays, right? Unless it's something super clear. And if I see anything interesting, I'll let you know. I'll let you know in the group chat. All right, as usual.
All right.
And good luck and good trading. And if you have any questions, then let me know in the chat. And if you recorded this, please send in the group. All right, because my iPad died, and whatever recording I had has been lost. All right, so hopefully someone has some recording of some sort, which I'm sure you do. Rabbit Man said he would record, right? So
Yeah, I think he did.
yeah. All right, folks. See you all in the next one.
Okay. Goodbye, Mr. Romeo.